Okay, welcome everyone to this live intraday strategy webinar on SB Trade Desk. We did just get the release of the CPI print for the month of July, weaker than expected on the headline figure, which is the month-on-month. Core coming in right at expectations. You are seeing the dollar give up some of that gains that we saw earlier today, trading weaker against the Aussie and a move here on the euro as well. It's good to be with you guys this morning. So we'll be going over some of these dollar crosses. The initial reaction is going to be, looks like dollar negative. We've been highlighting some of the major dollar crosses on the intraday charts, namely dollar CAD has been in focus. I gave you guys an update on Twitter last night on dollar yen. Also, Kiwi Dollar is another one that we're focusing at a very interesting juncture at this point. Eileen, good morning. Bernard, Chad, Mark, Nano, everyone in the room, great to see you guys. Let's jump right into the charts because we're in action here. Currently holding a small position on the euro. I noted that last night in the radar charts. We'll go over that. But first things first, I do want to jump into the scalp setups that were featured in last night's setups. So, Aussie Kiwi, it's continued to play it out exceptionally well. I hope you guys are taking advantage of this. We came into a near-term support. We highlighted that last night on the near-term structure specifically, not so much on the daily. And that was namely that 50% retracement at 1100 or 1100, we should say, the 111 figure. You also saw the median line parallel off the highs right in that region, prompted a nice decent rally here on some divergence in momentum when we noted that the break above 1140 shifted the immediate focus higher, but we're still looking to sell that rally. Okay, so for Aussie CAD, here's what it looks like on the live charts. Let's just jump right in. So daily, we broke that slope line, okay? That dates back again to the 2014 lows. We've been using those slopes for quite some time. We broke below it yesterday. Here we are checking as resistance. You do have a little bit more upside. 1170, 1175 is sort of where I'd be looking for some near-term resistance. If that holds and we get some short triggers up there, it might be nice, set up nicely for another short trade here on Aussie Key. Here's what the near-term. Well, before I jump into the near-term chart, one other thing I did want to note, besides the fact that, the intraday chart has us at support, you also had momentum here, and I noted this last night too, coming right into the 50 level, showing us a little bit of a rebound here. Not too surprising to see some upside on Aussie Key today. Here's what the intraday chart looks like. All right, so there was that median line off the highs. This was going to be the key support that we need to break below. Break above 1140 is what shifted the immediate bias to the upside. So we're looking for some resistance right around 1175. There's that slope line. We'll be looking for possible short triggers there. The bearish invalidation level did get lowered last night, but still all the way up at 112.30. So just keep that in mind. We'll be looking for some pretty compelling short triggers to jump in. But if we do break back above that median line, or back above that slope line, you'd expect to see a rally back towards 112.30. So to set up the U.S. trade session, if you see a 60 break in momentum and a pop through 1170, we'll sit on the sidelines here and we'll look to see if we can get that entry into a stretch rally a little bit higher, 112, 112.30 being the invalidation level for Aussie Key. Now, a lot of this is being driven by what we're seeing in the Kiwi Dollar, and that was also set up that was highlighted last night. So if Kiwi does break out and we finally get the opening range break to the upside, this would be a nice way of playing Kiwi strength aside from exposure on the greenback. So something I'll be definitely looking at as we continue to watch that Kiwi Dollar setup. So a quick look at the reaction here. Here's what the intraday charts look like, or the 5-minute charts look like on the reaction. So a lot of traders just fading that dollar weakness. Okay, Aussie dollar pretty much back unchanged. Euro dollar lower. Kiwi dollar lower. So we'll be seeing if the opening range was set with that spike. Let's just jump into one of the dollar pairs here. Next up on the setups from last night was the dollar CAD. I know swing setups are also looking at this trade. We've been following dollar CAD for well over 2 weeks at this point, and it's continued to play really well. It dropped into support in overnight trade. Let me get this up first. So the only thing I wanted to really highlight in the daily chart is you're seeing momentum break sub 60 and hold 60 as resistance. More importantly, we broke back below that median line parallel, and yesterday, last 2 days, specifically on a close basis, we've been trying to check it as resistance and it's holding. Okay, so that's a tell on near term. On the intraday chart, there is the level that we highlighted last night. We came right into it. So we were looking for the extension down into 130.33, 130, what was that, 130.29. And momentum saw a quick drop into that region, topside break, and here we are again. Remember, the invalidation level for the bearish side still 130.94. Excuse me. So again, just like Aussie Key on this one, we'll be looking to see if that U.S. Open can get us that stretch into resistance again for the entry on the short side of that one. Still like the dollar CAD, guys. Nothing's really changed on this. I know we blasted through a couple of times the invalidation level here earlier in the week, but the quick recovery, and more specifically the fact that we couldn't close above it, is still a tell that the broader downside bias may be in play here. So looking for a stretch into 130.90, we'll assess the scenario once we get up there. If we can get some short triggers, another possible scenario for a downside stretch in dollar CAD. Remember, 130.94 actually, guys, represents the weekly open. Okay, so that's exactly where we opened the week, and also coincides with the upper median line parallel over the course of U.S. trade today. A break below this, just to keep things in picture, here's your August open. A break below this really looks for essentially the August opening range low. You do have a soft target at I guess that's 129.94. Okay, it's a 618 retracement off the lows. It's also a swing low that you made here earlier in the month. Opening range low comes right in at a basic 236 off the low, and that comes in right around 129.58, 129.55. So that's the level that you see represented here on the daily charts, and that would be the conviction break for the August opening range. Give us that downside bias for the medium term. So dollar CAD still looking higher immediately from here, but looking to see if we can get that rally up near 130.94, possibly jump into another short entry on that pair. If we do, by the way, if we do blast through this, you'd look for the former lower median line parallel. That takes you somewhere in the range of essentially 131.30, the highs that we made yesterday. And then obviously the weekly high comes in at 131.50. Keep in mind, outside today's CPI print, okay, which again was, everyone's focused on the core read, but certainly the month-on-month read is going to be something that'll draw some attention, specifically with the Fed really focused on the inflation picture and the inflation outlook right now. It's going to be interesting to see what sort of rhetoric we get on the back of this, but keep in mind for the loonie, you still do have Canadian Consumer Price Index, the CPI print on inflation in Canada later in the week. I think it's on Friday. Let me just make sure. 21st, yeah. So we have retail sales on tap on Friday, as well as the CPI print for Canada. Any questions on dollar CAD before we move off? All right. Next up on deck was the Kiwi Dollar, and here is what the Kiwi looks like at this point. So, real quick, this was highlighted yesterday on Daily FX as well. The major key play here is that the opening range is set for the month just below an absolutely critical resistance range. This thing is stacked up, guys, on the upside, right where we are right now. I just want to jump through these levels really quick with you. Really, the significance of them, if the break happens, is going to be pretty big. So you have basically 66.02 into 66.30. 66.02 represents the monthly open. 66.15, okay, is going to be the high day close, specifically that we made here on the 12th. We talked about this yesterday, the fact that we're still trading within the range of that outside key reversal day we made off the lows. So again, adding conviction to playing this range in and of itself as an opening range strategy. 66.30 is not only the central monthly pivot, but also if you take a look at this on the near-term chart, 66.30 also represents a basic 618 from the retracement from the decline of that late July high. Okay, so really stacked up here for the Kiwi Dollar. You had a short-term structure which was embedded within the confines of this structure that you're looking at in the daily chart, the invalidation level, again, being last Friday's low. Near term, you had this embedded one, which it looks like you're testing and looking for a break of support just now. So we butted up against that resistance level multiple times in overnight trade. Look for near-term support near 65.55, but really the bearish invalidation level, or the bullish rather, excuse me, bullish invalidation level is down at last Friday's low. Okay, and that would basically take us through the lower median line parallel, as well as back into the confines of that parallel that we broke out of last week. So a lot shaping up here for the Kiwi dollar. If we do pull back, again, this is a region of which we'd start to look for possible long exposure. At this juncture, now that the U.S. opening range has gotten so wide, not really looking to take any new exposure or new positioning on here for the Kiwi. The focus is this region. I mean, we need to get through this 66.30, 66 region. If we do, the topside targets are plentiful. The first target being basically 66.63 right up here. That represents the July reversal day close. So if I take it back to the daily chart real quick, the swing high that we made on the 29th, the reversal day close, comes in right at 66.63. The median line off the low comes in right in that region as well. And it's going to be your first target to the upside. Secondary would be 100% extension off the low. That takes into 66.95. So still looking for a setback in Kiwi. Near-term support 65.50. Bullish invalidation 65.13. All right, any questions on the Kiwi dollar before we move on to the radar charts? As usual, guys, if you have any questions, trade setups you'd like to review, please feel free to throw them on the message board. We'll be more than happy to take a look. Okay, so moving right on to last night's radar charts. Here's what they look like. So the euro dollar wasn't really ready to put it out as a major operative scalp just because we haven't really come into the major key support that we were looking for, just shy of. Here's what the daily chart looks like. So if we are trading within the confines of this operative slope, we're looking for support right about where we bottomed out, where we opened the session. Let me take that back. Where we closed the session yesterday, opened the session this morning. You're looking at that median line parallel right off the lows. You're back below the 100-day moving average, which is 110.46, and that was the first initial target to the upside you'd want to see break. But here we are, still within the confines. If we break back below this, you'd look for a move right into the monthly open, which takes you right back into the former upper median line parallel, which was resistance, now support. So keep that in mind for the euro dollar. Clarity on this one comes on the daily charts, I think. So if you notice last night's radar chart, we noted that we were holding a long position, looking for a stretch initially into 110.55. It overshot that, just missed the 110.82 target. We kind of capped out right around 110.73. So half that got taken out at 110.52, still holding the other half. Stops are against this low, so we literally almost got stopped out. If we do, it's going to be a small gain, if not a washout. But the point being, this is going to be near-term key support here as you open up the U.S. trade session. All right. For the euro, keep in mind, I think we're pretty limited on event risk there as well. Construction output comes out later. What is that? That came out this morning. Market Eurozone manufacturing and services PMI numbers could be a decent market mover back on Friday, but these are just preliminary numbers for August. You're not expecting any major deviation, so pretty limited on event risk on that front from the euro. But major key support, we're basically testing it right now. Okay, a support confluence at 110.16. No change to our levels, no change to our bias. That's going to be the near-term support, but I just wanted to highlight one thing. The major bullish invalidation level is still this region. Okay, we'd really need to clear below this to invalidate the broader upside that we've been working with on the euro. This represents a 618 extension from the decline off the highs. That gives you 190.70, and a 618 retracement of that same advance comes in at 109.86. So major key support if we break below that 110.16 level, almost was that 40 pips down, 50 pips down to the downside there. You'd look for a little bit more of a key support hold in that region. But we'll hold on to that long. We'll see if we can get some play here to the upside if we hold above that low we made yesterday. Any questions on the euro? All right. Last but not least, moving right into the Sterling Kiwi, another one yesterday that looked really well primed. If you guys remember during the webinar, this thing was right at resistance, and we were talking about it right here, saying we're basically looking for resistance right here. Do you remember that? It actually held. So right into the U.S. Open, the short entry and the 5-minute trigger probably got you in, or by the time I saw it, it was right around 238.40 right here. So you had a little bit of an upswing as far as 50 pip stop, but remember you have a 75 pip quarterly ATR. So even with that bad entry at 38.40, you still had more than enough room to squeeze out your 75 pips into key support. Here we are again, testing the upper median line parallel once more. The broader bearish invalidation for this trade hasn't changed because we haven't really made a new low or invalidated any of the support structure. So we're still keeping it at 238.90. As long as that holds as resistance, I don't really want to be looking for long exposure. If the Kiwi again breaks out, here's another pair that we could be using to play alongside of the Kiwi. Specifically, the pound does look like it's constructive and looks like it's poised and coiled for a breakout in the near term, barring that breakout here above 238.90. You look for some near-term resistance. At the same time, this is the bearish invalidation level, guys. So if we do break, I really wouldn't be looking at this from a scalp perspective. I'd be looking for a pullback to use to get in some swing positioning, because as far as identifying your topside objectives, you're now into multi-year highs. It becomes much more difficult to try to ascertain, workable scalp targets above this. So we'll be watching for that high day close for the year. That's at 239.40. As long as we hold below that region in the near term, 238, we'll continue to look for possible short triggers and momentum. And it's a tell here that on the rebound, also, we still can't clear 60 to the upside. The 40 hold here does suggest that the immediate slope is still to the upside, which is why we're looking for short entries higher up. But 238.90 is still what we're looking at as resistance. Any questions on Sterling Kiwi? All right, I want to open up the floor to your questions and trade setups, guys. Feel free to throw them out. We kind of flew through all of these today, so if there are no other questions on these, we'll take a look at some of the other crosses and also some of the CFDs that we've been following. Chintan says, good morning, Mike. Can we look at the Aussie dollar, please? If not, looked ahead then. Yeah, Chintan, we can definitely take a look at the Aussie. I haven't been too keen on trading the Aussie, but I'll definitely take a look at it for you. Here's what I'm looking at, man. And just for a disclaimer, Chintan, I actually like the Kiwi setup a little bit better on account of a couple of different things. A, your monthly opening range is much more clear and well-defined here. B, the monthly opening range is taking place right below a major key resistance. And C, what I mentioned earlier, the fact that we're still trading within the confines of the outside reversal day, which basically defines the entire monthly range. So this August 12th session is larger than the monthly range itself, and as such, the reversal day, key reversal day off of the yearly low, I'll be looking for a break of this. So once we clear this final range, I think you get a much more definitive clear price action, or directional bias rather. Whereas the Aussie, a little bit messier, right? You kind of broke that upper median line parallel, but you kind of didn't. You didn't really have that outside reversal sort of tell like the Kiwi did when you're about to make a little bit more of a significant turn in price. You kind of got a support trigger break here with momentum last night, but Price action hasn't seen any follow through. So you know what I'm saying, Chintan? When we look at the behavior of what the pair is doing, that's what sometimes will draw my attention or dissuade me from taking a position. So on the Aussie, I just want to point those factors out to you that, you know, there's a lot of indecision in the pair right now. And when that's the case, it might be better off for us to shift our attention elsewhere. Now, we doesn't mean we need to stay off the Aussie. There are some Aussie pairs that seem of interest to me. Euro Aussie seems interesting. Sterling Aussie, while it's still not as neat, I still like Sterling Kiwi better. Might be a decent play. Aussie dollar, just don't have the conviction for you here, Chintan. But here's what it looks like on the 30-minute, man. I'll definitely take a look at it. So if anything, on its face value, it is a simple weekly opening range. Let me just snap these lines for you real quick. Whoops, a little too much. All right, so at its face value, here's your Sunday open. You pressed into a Sunday high. You pressed into a Tuesday low. And here you are just muttering about. Okay, so even on the weekly basis, doesn't have that clear definitive directional bias. If you put a gun to my head and say, Michael, Aussie long or short, I still would say a probable long breakout near term. Maybe a duck down into the lower median line parallel, then a ripperoo, but that's just my opinion. Okay, it's a gunshot approach. We don't want to do this, you know, ready, shoot, aim type deal. If the technical clarity is not there, we'll wait until it is. There's plenty of other opportunities, plenty of other pairs, you know, that are on tap, that are on the menu. I think that'll offer us a little bit better bang for our buck. Chintan, does that help? Does that make sense, man? He says, thanks, Maya. You're more than welcome. More than welcome. So that's the Aussie dollar. Some of the other pairs that we were highlighting on the radar charts earlier in the week, I do want to take a quick minute and look at Euro Pound. Oddly enough, yeah, Mike Boutros wants to look at Euro Pound. That's a weird one, but here's what we were following earlier in the week. And the major play here was the fact that we ran into 71.58, 71.80, and then this thing just stalled dead. Stalled dead. And we were looking for support along the lower median line parallel. That broke. The shift now focuses to the broader lower median line parallel of the daily slope that we've been following. Here's what Euro Pound looks like now. Okay, so there was the initial embedded one that we broke. The break below this really shifts the attention to this region here. Okay, and that's basically into the 170 handle. You're now checking the monthly central pivot as resistance. Momentum completely flatlining around 50. Here's what the intraday chart looks like. Okay, so there was the break below that 618 extension, 70.90. Went right through the lower median line parallel. We're now checking 70.37, which is again that 236 off the highs. And this is an area of which possibly you would look to see if Euro Pound can find some support. A 764 confluence with the basic lower median line parallel that we've been following. And this is what will be near term the broader bullish invalidation, meaning if we break below this level, you'd be essentially looking for fresh yearly lows for Euro Pound. Again, a pair where the fundamentals heavily is weighted to the downside, heavily in my opinion. You know, you're looking at the ECB, which is still doing further easing. They're upping their approach. They remain committed. You got that deal for Greece finally near term, which should quail some of those concerns. But you got the BOE, and specifically on the back of the inflation numbers we just got, stronger than expected. I still postulate that the BOE is most ready, most prepped to begin the normalization process of monetary policy, and that divergence alone should keep this pair broadly under pressure. That being said, you know, the initial move that we saw off the lows, the constructive nature of the advance still has us looking higher in the medium term while within this formation. Now remember on this pair, guys, again, I just wanted to point out this formation and the key levels that we're looking at for the Euro Pound. Keep in mind, it's a really tight ATR. The daily ATR is only 66 pips. And while that makes trading it from a scalping standpoint much, much more difficult, keep in mind they are pound pips. So obviously your profits or losses per pip will be greater on this pair. Nonetheless, an interesting level here. So we'll see if we can get one last drop into this key region. We'll look for long triggers down there. The only thing that would put me back constructive outside of a drop into this would be a break, would be a break back above the lower median line parallel, i.e. that 618 extension. You're looking at 70.90. So right now, key levels to keep in mind for euro pound is either a breach back above 70.90 or a move down into the 70 handle, in which we would possibly be looking for some nice long exposure down there. Let's take a quick look back real quick at Aussie Kiwi. No, I'm sorry. Oop. Okay, so here's another structure actually that might be in play for the euro pound. And one other thing I just wanted to note on this is look where the upper median line parallel comes in. Same region that we just highlighted. Same region. Okay, adds further conviction to that being a major key support. Look where the lower median line parallel comes in. Same region. Okay, that's conviction in your levels. So while it is a tight, super tight range here for euro pound, I think the guidance is pretty clear as far as what levels we need to be targeting. Any questions on euro pound? Here's a quick look at what the Aussie key looks like on the 5-minute chart. Again, I'm really interested to see if we can find some resistance here near term. You can see that momentum has been putting in some slight divergence. Remember, you need to be looking at the closes here, not the wicks. So bring it to a line chart. Ooh, no one wants to see that. You can see a slightly higher high. I was looking at this right before the webinar. And then here's a slightly lower high in momentum. So we'll be looking to see if we can get some sort of short trigger here heading into the US trade session. Dollar CAD on the 5. That's your trigger that I'll be watching in US trade. See if we can get that stretch into 30.90. And as usual, a quick look, guys. We just bypassed it, but I just want to show you a quick look at what the dollar index is doing before we wrap things up. So the dollar index, the range has been pretty clear and the levels have not changed at all. I don't want to bore you with this chart. We go over this every single day, but 12.12, the monthly open, 11,942, which is the 38.2 retracement. Keep in mind that the sliding parallel actually is a little bit higher at this point, just right around 11,950. But this is going to be the bearish or the bullish invalidation level that you need to see break. We'll also count this as the monthly opening range break, looking for key support into 11,900, 11,880, 885 rather. If that breaks, this is going to be the near-term bearish invalidation level. So if you see that top side break, we'll no longer be looking to short dollar pairs. So the price action is still pretty clear, but lackluster as far as the dollar crosses are concerned. Here's the 30-minute chart we were looking at earlier today. Again, just wanted to highlight here, basic weekly opening range is in play. And the weekly opening range comes in just below that 12.12 level. So still waiting. Wait and see approach on this dollar. We need to see this thing finally break. And once it does, I think we'll get a little bit more of a definitive directional bias here for the greenback. All right. Any other questions, guys, or trade setups? Do feel free to throw them on the message board before we wrap things up. We'll be back on tomorrow morning at 8:30. Eileen says, when you trade the pairs with high ATR quarters, do you still do a one-to-one with your stop for the profit, or different? Great question, Eileen. Absolutely not. If the quarterly daily ATR is anywhere upwards of 40 or 50 pips, typically I'll always be looking to make my stops tighter than that. I'm of the mindset, Eileen, is anytime you expand your profit target of a quarterly daily ATR, it's always in your best interest because that gives you the flexibility. If I'm looking for a quarterly ATR of 25 pips, honestly, if you guys are looking for a stop tighter than 20 pips, you better be damn good on the entries, okay? Because it's very, very difficult to give yourself that little of a cushion when you jump into a position that it can't even go more than 20 pips against you. So typically I'm looking for a pair that has a quarterly ATR of 20, 25 pips. But if the quarterly ATR is showing me, 80 pips, that doesn't mean I need to put an 80 pip stop, Eileen, right? No way. I'm going to try to keep that, impress that as best as I can, or adjust that as best as I can. And remember, Eileen, what we always talk about here, the only thing that concerns me about your question is this: irrespective of what I'm targeting on the market, it's where the stop needs to be, okay? As opposed to me saying I'm targeting 30 pips, I'm gonna put a limit or a stop at 30 pips. I need to see, okay, the stop needs to be up here. Does that 30 pip match my profit objective? It needs to be the opposite. Risk management is paramount in any leveraged market, leveraged asset. So the stop needs to come first. If that stop makes sense with your profit target, that's what dictates the trade, not vice versa. So yeah, Eileen, anytime I can improve that to a 2-to-1, rarely do I get 3-to-1. But if I can get a 2-to-1, 3-to-1 stop, absolutely. It only works in your interest. She says, so if trading these pairs, entry is key as always, and stop need always. Right. Well, I mean, Eileen, a stop is not negotiable, right, on any trade that you take. I don't care what market is, a stop is non-negotiable. But what I'm trying to stress upon you is that the stop, where the location of the stop is more important than the distance from the entry. So I'm always saying, okay, if this breaks, that's going to invalidate my bias, right? So that's X amount of pips away. What's my profit objective? Okay, cool. That makes sense. And that's the logical deduction you go through. So for example, on the euro dollar, let's go through an example right now. I'm looking for, let's say I was looking for this short trigger here on the break, and the market was coming off into 110.47. The high needs to be against 110.70, 30 pip stop, too tight next to my profit limit, can't take it, can't take it. Now if I caught it earlier, and I got an entry at 110.50, stop against 110.70, that's a 20 pip stop. I'm looking for 27 pips. That makes sense. And literally, that's what I go through, guys, before every trade. Where's the stop? What's the target? Okay, makes sense. But it's always where's the stop first. Not I'm looking for 27 pips, therefore my stop needs to be 27 pips. Where does that end up? No, 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 no. It's all about the technical clarity. And again, the technicals are what guide us on every approach that we make. So Eileen, does that help? Does that offer some clarity on sort of the thought process that we're going through here? Great question. Says, yup, thanks. All right. Cheers on that, Eileen. Great to see you in the room as always. And dollar yen, we didn't go over dollar yen. I didn't update this on the radar, on the intraday update from last night, guys, because it's the same exact update as the 17th. So if you go to the 17th update, the dollar yen chart hasn't changed at all. We're still waiting for either a concerted move and break below the weekly opening range low at 124.17, or we're looking for that break above 125.56 to give us a stretch, a final stretch into that upper median line parallel. We've been just dilly-dallying in this range since the week started. So here's your weekly opening range low that you made on Sunday. You pushed into a Monday high. You test the Sunday low, fail ahead of the Monday highs, fail ahead of the Sunday lows, and here we go. Here's today's U.S. trade reaction. Obviously got a quick break there and a reversal. So you're still focused on this key range. Again, the daily chart is really paramount on this. We've been talking about this region for well over 3 weeks right now. It's the 124.35, 124.13 region. You're looking at the 2007 highs, 1618 extension off the December low. swing highs that you made in late June, the close highs that you made in July, and here we are. This is the break you need to get a much more concerted drop, much more conviction downside bias for dollar yen. Until you do, we still need to see that clarity in the weekly opening range. So frustrating for me because I really thought that the CPI print today would have given us something here on dollar yen, either the breakdown, which is what I prefer, obviously, or the move into the upper median line parallel, but not getting it. Not getting it. I don't know if you guys noticed what happened in overnight trade, but just a quick remark on what's going on there. You saw that the Asia market, specifically the Shanghai index, saw like a massive 4 or 5% drop right at the open. And then there was rumors that the PBOC came in with extra liquidity measures to prop that up. This is going to be an ongoing story. Graham says Aussie Kiwi short trigger right now. So we talked about that divergence that you're getting into the highs. Really wouldn't work with that short trigger. You could work with this short trigger here. Not the most compelling. Yeah, could be a nice play here, actually. So if you do get a short trigger, that your stop would be against the highs. The U.S. opening range, which is defined by 111.70 into 111.58, is going to be the break that confirms it, Graham. So if you see a downside break here, you're bearish against the highs. Doesn't mean you take entry there. It just means that shifts to the downside bias heading into the U.S. trade session. But broadly speaking, for Aussie Key, I still think, and this is what I said earlier in the session, I still think you can possibly get that stretch into that slope line that we've been pivoting off of. Remember, those slope lines have been very fruitful over the last couple of years, right? So still think you can possibly get one more stretch higher, but long story short, yeah, you do have that 5-minute short trigger, which is pending. Make sense? Graham says noted, thanks. Right on, right on. You know, it would be even more compelling, Graham, is if this thing tries to make a run into the highs, then you get even more divergence, meaning RSI fails ahead of 60, for example, as price pushes into a new high. That would make this trigger all the more operable. Remember, when you're looking at these support and resistance triggers and momentum, it's just like support and resistance in price. The more touches you have, the more conviction you have on that break when it finally gives out. So I don't want to stress that low per se because you're going back. Well, let me take that back. You have two touches here. If you want to use that low, basically another touch and a rally here would really confirm this as a more solidified trigger, but look to see if that resistance holds. He says, yep, support resistance 3 touches. Right on, Graham. Okay, cool. We're on the same page, brother. Not bad. And then it looks like, if I'm not mistaken, dollar CAD just stretched into it. Okay, so dollar CAD is approaching that region right now. Let's bring up that 5-minute chart again on dollar CAD. That might be a nice entry. Okay, so a lot of times what we can do is just take a near-term, real quick approach on price action just to see if there's anything that's sort of staring us right down the face. So you have a basic trendline resistance off the highs. 2 extensions I'll look at. One retracement, one extension is either an extension off this high to see if we've completed any meaningful ratios on the decline. And you can see that 130.34 actually represented 100% extension. So that's something that's interesting. And then a basic retracement to see if the rebound and rally here has come into any resistance from a near-term prospect. So these are like what momentum traders are doing. And if you do that properly, you can see that we're just testing the 50% retracement up here. My only problem with jumping into a stop here is where do you put your stop? Or jumping into a short here is where do you put your stop? I'd want to see a couple more minutes of price action to see if we can dilly-dally here, then move off where I can put the stop with a conviction against 130.94. But right now, if I put the stop against 130.94, this thing spikes into 130.96, we're out. And that's not a key high that we're trading against or a technical region. So we'll be looking to see if that 5-minute chart can give us a little bit more congestion, a little bit more consolidation up here. If it does stop against the high, looking for the rebound or the recovery lower, I think is a good setup here on dollar CAD. That's the region we were looking for. We're there. We're there. Let's see if Kiwi Dollar has made any progress as well. That's stalling out. Again, it's an ugly trigger, but it's something to keep an eye on. You can envision a scenario, guys, where Kiwi pulls off right into that trigger support on the daily. Momentum on the intraday is at 40. So if that breaks, you look for a pullback into this region. And like I said, that would be a nice possible area of where we'd start to look for long triggers. All right. Any other questions on any other pairs, guys? Any strategy questions on anything? Keep in mind, it is Wednesday, so at 1 p.m. today, Jamie will be online with his midweek strategy webinar at 1 p.m. to cover what setups he's looking at and where we stand on a little bit more of a broader approach on some of these pairs. Heading into the U.S. trade session, again, the only exposure I'm holding on to as we speak is still the euro-dollar long. So let's take a quick look at what that's doing. Okay, so we defended that support structure pretty well. And that adds conviction. So here's the U.S. opening range, guys. That's not going to be a play of any magnitude from a scalping standpoint. Obviously, a topside break here further confirms our bias to the upside. But from an opening range standpoint, you're not going to really want to use that massive range. So keep in mind the weekly opening range low. Keep in mind that support confluence that we noted from that lower median line parallel and the former upper median line parallel right into this region, near-term bullish invalidation. So looks like we could still get that rebound. We'll continue to hold that long euro, looking for a break above 110.50 again. All right, guys, we will pick things up. Hey, Mike, looks like Jamie is on tomorrow because of the FOMC minutes today. Mark, thanks for reminding me. I completely forgot. 2 o'clock today. Oh, my goodness. That's embarrassing. Mark, thanks for reminding me. At 2 o'clock today, you get the FOMC minutes. It's not going to be a major market mover, in my humble opinion. I've talked with some of the guys on the other desks in New York. They're saying the same thing just because this historically, this last FOMC policy decision was actually the shortest from a word standpoint, literally from what they said, the shortest FOMC policy statement that we've seen. So they're saying that we're unlikely to get a material shift in what we're supposed to see from the expectations of the committee. And, you know, barring any type of major commentary coming out, whether it's regards to the lackluster inflation growth, China, or specifically what's been going on the macro picture, we kind of already know where they stand. Right? And this data doesn't take into account the inflation that we just got earlier today, you know, some of the weaker data prints that we got last week. So I don't really know, Mark, if we'll get a major market mover or a play on this release today. I don't expect much. If anything, it could further dent dollar expectations, I think, and we could see the dollar start to come off. That being said, I guess Jamie will be on tomorrow at 1 p.m. Eastern, so he'll pick things up there. I will pick things up tomorrow morning at 8:30 Eastern to wrap up the week. Hopefully we'll have a lot more setups in play. Till then, best of luck trading, guys, and I will see you tomorrow. Cheers.